And what I want to talk about is how our kind of zero DTE setup prints money, or our process prints money into it doesn't. And that's a kind of weird kind of title, but it's one of those things that the way we set this up gives you a probabilistic edge right off the bat. And then the way we adjust it gives you an edge. The way we put the stop losses give you an edge. But if you have to adjust it, you have to have a point where you say, okay, I'm done. And you want that point to be no more than 3 to 4 times the original credit that you received. So the loss can be manageable. It can be small enough for you can recover your monies fairly fast. So up until Liberation Day, we were something like 38 for 39 or something like that for the first quarter with this zero DT kind of process that we're going to talk about right now and put on. And we were up over 30 something percent. And so that was printing money until it doesn't. And what happened is on Liberation Day, we rolled the trade out. We took a zero DT trade, and obviously hindsight is always 2020. Took a zero DT trade and rolled it out to that Thursday. You guys remember Liberation Day was on a Wednesday. The announcement in the Rose Garden was that evening after the market closed. So you can't trade the SPX, at least on the platforms we use, at night. So the market moved a ton down, huge move down. It was down so much that evening that we thought we were going to hit circuit breakers. We didn't, but we were down a ton that next morning, okay, and that next day. So when we rolled it out the next morning, the trade was done. That decision to roll it out, even though we were rolling it out pretty far, the move was so great that we were deep in the money already on that day, and there was no fight in it. So we lost 30+% that we gained already in 3 months, being 38 for 39 or whatever it was, in just one day because of that decision. But since then, we've gained a ton back already. And it's all said and done, we're probably going to be, green very soon here, and still hit 50+% on the year on this zero DT strategy. But you want to be able to avoid those huge hits the way it did. And I think one of the ways of doing that is treating a zero DT trade as a zero DT trade. That's what Dr. Mellors does. And at least 99% of the time, treat it as a zero DT trade and don't roll it out. And especially when you have this kind of cloudiness hovering around that it could be a huge move in that next day, or the next few days, or whatever the case may be. It could be a huge move that's possibly on the table. You don't put yourself in that risk, right? It was a poor decision, and obviously hindsight is 2020 once again. But this trade, if you follow the way we do it, and you have the discipline to do the stops, understand how to adjust at a high level, it's going to make you a ton of money. But you can't be to the point where you're greedy and you're not okay. You just want to win on every single trade. You have to be able to say, okay, this is a good loss. Losing is good, right? You want to be the best loser. It's a book out there that we were reading with our book club that's called the best loser, right? It's kind of a wordplay, but it makes a lot of sense when you think about it. You want to be a very good loser, because if you can lose small, the winners are going to take care of themselves. The way we trade on almost everything we do, if you focus on not losing, or losing very small, I shouldn't say not losing, but losing very small, being a good loser, then the winners are going to take care of themselves. So let's break this down really quickly, and let's do the kind of setup that we talk about. Before we continue with the video, I just want to quickly point out, if you need any additional help, please consider joining our trading club. You can do that by clicking on the link in the description area, and you'll get a 3-month trial for a flat fee of $60. We look forward to seeing you in the trading club. Back to the video. And you guys know, with the 1DT trade, we look at the VIX rule of 16. You can look at that as well with the 0DT trade. So I'm going to do that right now, just to get a kind of a more comprehensive look of what's going on with the market right now. So we have this 21.96 cash VIX right now. And if we divide that by 16, it's going to give us 1.37%. So that's a pretty big move. It's based on a one-day move, but that's a pretty big move. We're still early in the day. We're less than 30 minutes into the day. And so you can call this the one-day move. The market is expecting a decent type of move today, perhaps, right? So if we go and look at this straddle price here, and that's not that big of a move. It's about, what is that? If we add this up, let's just say it's 32. So you take 32 and you times it by 2. That's going to give you 64, right? So what we do is we take that 64 and we add it to the current price and subtract it to the current price to be able to set up our strikes, our iron condor strikes, our strikes on the put side and our strikes on the call side. So let's do that and let's see what that looks like, right? So if we take the 5685 plus 64, that's going to take us to 5749 or 5750, right? So that's a 7 delta on the call side, and we do a 20-point wide spread. You guys know you can do a 30 point, a 40 point, a 50 point. I normally do 20 to 50, but mostly around that 20-point wide spread. Dr. Metals mostly does a 50 to sometimes 100-point wide spread to start off the trade. But recently, because of the volatility, he's been going a lot tighter. All right, so on the put side, if we take this 56.88 and we minus 64 from it, that's going to take us to 56.24, so about 56.25. That is a 9 delta. So if we do a 20-point wide spread, that'll be here. That's 140. I don't like any of those. I don't like either side. So what I would do is move this down more. So let's just say I move this to a 6 delta, kept it 20 points wide to start with. That's still giving us about 120. And then let's say on this call side, I don't think we're going up a ton unless we get some type of notice today. And I don't think we're going to get any notice today. But let's see if we made it a little less delta wise. So the 57.55, that would be good. And so let's just look at percentage wise what this is. Because keep in mind, we were talking about the VIX was the one day move was 1.37. So let's just look at this. So 57.55, I didn't like the number, minus the 56.88 divided by the 56.88. So that is only 1.17%, right? So that one day VIX move is obviously bigger than that at this point, right? And we've already moved more than two standard deviations based on the straddle price. So that's a little. It tells you that you probably want to be a little bit further, but that seems like a pretty big move for the 0DT today. 1.37 seems pretty big. If we go to that put side, it's probably going to be something very similar to that because we just moved it 5 points. So if we wanted to collect a little bit more, we're going to have to decide: do we do 2 contracts? Do we do 5 contracts? Do we just do 1 contract? Do we go wider on the trade? And so in this case, we did 2 contracts here and we collected 200 and bet that we're just not going to have a huge move in either direction. That's what we're going to try here. And so we're going to go over here and we're going to put this in the 0DT account. We're going to send this and we're going to see what we got. We got a 6 delta on the call side. We got a 7 delta on the put side right now. And we're going to see what we got going here. All right, so you guys can see we jumped up a little bit more here, but we're not getting any premium there. So I'm going to cancel this for a second, and then I'm going to redo this. I want to keep that call side where it's at. The put side is at a 7 delta, and I'm going to move that put side to an 8 delta. And we're going to see if that's to my chagrin, but you guys can see that we're going to try to get that to that 115. We're not getting a 115. And so I'm going to go to 110 and see if we can get filled there. And they still not giving it to us. That's a bummer. So 1,000, 2 1,000, 3 1,000, 4 1,000, 5 1,000, still not giving it to me. And I don't want to move that up too much more, but you can see we should get filled any second now. Don't want to have to move that to 105, but it looks like that might be the case. Man, that's a bummer. All right, so let's see. That's not going to be 100. That's not going to be $100 per contract there, and I'm not going to bring it up the call side. I'm not going to make it wider at this point. So this is going to be it here. So we had to go with the 105 on the trade, and so keep in mind after fees and commissions that gives you about 195, And so if you go here, you have to keep in mind these are two contracts that we started with. So we go 2 contracts there, that's $90. And if we take the 45, let's just say 45 times 3 is 135. And on the call side, and I don't, let's say 135, and then we go here 135, excuse me, 155. You can see that that would be the max. I mean, the loss there would be 135, or excuse me, 310. Excuse me, 310 would be the loss, right? If we got stopped out because it's 2 contracts. Keep in mind we got 195 in the trade. You times that by 3, we can actually go as high as 585. So what I would do here, just to give this a little bit more kind of room, is take this up to 175 and 95 there. And so that'll take us to 390. And I just think we're not going to jump up a ton. So I'm going to put the alert there. And then on the put side, I'm going to do it the same kind of concept, but here we have the 55. I think the put side is going to come, it's going to jump back up. I mean, we have more risk to the put side perhaps today. And so let's go 60 times 3 is 180. And so what we're going to do in this one is probably go to about 230 and 250. If we did that, that would be 500. Keep in mind we had 195 times 3, that's 585. So we'll still be okay a little bit there. And so we're going to let it play out. All right, so that is the alerts, and there we go. So that's not the alerts, that's the good to cancels. And then we're going to put the alerts, you guys, just in case things start to fall a little faster or go up a little faster, or it'll give us an opportunity to adjust one of the sides. And normally I'm watching it, or you should be watching it, but obviously we're on the trading floor right now, so I'm going to be talking about some other stuff. So just to give myself a heads up if I'm yapping about something else, that the market is starting to move. So that is a 6 delta. If we in the high on the session, near the high of the session, let's go to 57.10 on the call side. So if we jump up to 57.10, greater than 57.10, and then on the put side, we're going to put less than. And I just look at the low really quickly because we did drop a little bit when we first started. So the low is 56.75. So that's not too far from where we're at right now. So let's go with 56.60 and see if we get an alert there. So less than 56.60, and there we go. All right, so we got everything set, and if we get stopped out on one of the sides, we're going to come back in, and that acts as our roll away, and we're going to have to roll up the non-tested side, so that acts as our roll up, our adjustment, right? We're gonna have to move that up towards at the money to be able to collect enough premium to be able to pay for the stop out, right? And so normally I can adjust 3 times before I realize, okay, this trade is becoming tough. And then when that's the case, you have to be okay to take a loss. If you can take a loss on these, it's fine, especially with the way I trade this. I can have a very, very high win rate. 90+% of the time I can win on these trades. So you have to be willing to take that loss and just move on and say, okay, I'm going to get it back. Just like earlier in the year, we were up like 10% in a month, and then on the last day we gave some of that back, right? We're only up like 4% on the last day of January, I think it was. And then we got all of that back plus some, and was up 30-something%. Then you know what happened when I explained earlier. So we have to avoid any kind of hiccups that hit us too hard. That first time was fine, that second time was not. And so now we're back on a nice little win streak, and we have to make sure that we don't get hit hard. We're going to get hit again, but we have to avoid any big losses, because once again, the winners will take care of themselves. All right, so any questions on this before we move on?